In this episode, I'm here with Christina Garza and James Westfall, a bookkeeper and a CPA, and we're going to talk about the things that most business owners ignore in the fitness industry, but they should pay attention to if they want to learn how to make the most money and save the most money every single year.
If you own a gym or you need a gym, this is your guy.
My name's Mike, and I help fitness studios that are ready to take action, work hard, and grow their studios. In this very saturated industry, there's tons of competition, but the opportunities are incredible. We'll cover the most common challenges in the fitness world and invite guests in the show that have learned to overcome them and share their strategies with you. This is the GSD Show. All right, everybody, so welcome back to the GSD Show. I'm here with Christina Garza. Say hello.
Hey.
And I'm also here with James Westfall. Say what's up.
Hello.
Christina has been a bookkeeper for 10 years and has owned accounting pros for 7. And James Westfall has been a CPA for 20 years?
19 years.
19 years, we'll round up, but by the time you see this, who knows, right? So a lot of experience here, guys. And the reason I wanted to do this episode is because this is something that I think, in general, small businesses, but in particular fitness professionals, just do not find interesting. The books, taxes, organizing their stuff is just boring to a lot of you guys, and I get it, but I promise you that for the next 30 minutes, we are only going to talk about the stuff that matters. We're going to do it in a fast-paced way, and my goal is to really get you to understand all the little things that you should be paying attention to and find ways to be able to help you make and save money at the end of the year with your taxes, little tricks to do that, as well as how you should be looking at your books to make sure that you're really growing and scaling the company the way you should. So, you guys ready?
Ready.
Yeah, ready.
All right, let's do this. What are some of the things or some of the reasons that you believe small business owners should, basically get somebody to start helping them with their books, and at what point should that happen?
Well, we meet a lot of people who have done the books on their own or have had their wife or partner handle the books. And when we see those files, we tend to see lots of little things kind of going on. So usually there's some creative accounting that's happening. So maybe the chart of accounts is a lot bigger than it should be, or maybe things are being categorized incorrectly and you're not really getting a true picture of, what the business looks like. And so when we're going in and evaluating the entire business and making sure that, the numbers that we can provide to you are real and accurate and will give you some real knowledge behind what's been happening and start to look forward into making some goals. A lot of times I see, maybe some accounting experience, but not a lot. And when you're working with somebody like Accounting Pros, you're getting an accountant who has an accounting degree, and you're also working with a CPA who knows taxation. So you get that power team who can really help you thrive.
And another thing too, an advantage that I saw when I hired my first bookkeeper was that I had a fresh set of eyes outside of mine and my wife's eyes, looking at the actual numbers, and also it was non-biased, right? And
Exactly,
I noticed this is something that I've talked about with a lot of business owners. You probably experienced it too, James, that a lot of people will justify expenses because they really want the business to grow and they're excited, they're optimistic, and so they buy things and they say, oh, it helps the company. Oh, we need to do this though. We need to upgrade this. And maybe they don't necessarily need to do it right now, and it's actually hurting them in the long run. A non-biased set of eyes that's looking at things logically and rationally is able to help them with counsel on some of those decisions.
I think it also makes it less personal as well. So when I go in there and I ask the question why, it's not, why'd you do this, honey? It's, why did you do this, client? Or, I'm coming in and it's black and white numbers to me. It's not personal at all. So when I do ask those questions, it doesn't feel like a threat or anything. It's really just honest question asking. And then we can, moving forward, we could talk about big purchases or, big things that you're trying to overcome in the business together, and you don't have to have those nighttime conversations with your partner trying to explain why you bought a new computer or why you need a car for the business.
Got it. Wait, so you're saying you don't call all your clients honey?
I do sometimes.
Isn't that standard practice for you, James?
No, not usually.
No, not usually? There's a line? Okay, that's all right. Okay, so you work together with CPAs, which obviously does a different thing, right? I have your company helping me because I want the books to make sense. I want to make sure all the buckets are in the right spot. I'm not overspending, and I'm really able to look for areas of improvement. And James, you help me out with the taxes and making sure that I'm taking all the different things that I'm doing and showing me tricks and ways to structure my expenses so that I can save the most money at the end of the year in taxes.
That is correct.
So you guys work together. You work with, James is actually a preferred CPA for you, right?
Yeah, exactly.
So how does that work? How do you and James communicate on clients, not just me, but everybody's, all the fitness studios that you work with? I know you work with a bunch of them. So how do you guys work together?
Well, so when James and I started working with one another, I made sure that he understood, how to find information in Xero. So Xero is our accounting software of choice. We get a lot of people who use different softwares, and I wanted to make sure that he knows how to go in there and pull reports that are essential for doing his work, and then kind of get a picture of what's been happening. So we kind of have a powwow and talk about what we've seen in the file, and then we include the client as well in discussions of what the plans are for the future. And I make sure that there's good communication going all around. So if I notice something kind of wonky happening, I'll make sure that I talk to both of you guys. And then on the other side, it's your responsibility to reach out to the CPA as well. So for example, if it's the end of the year and you're making some big time goals for next year, it's really important to talk to your CPA to make sure that your business is accommodating for those goals. So are you in the right structure? Are you thinking about the right things in terms of tax? And so, I am communicating with James, but you also should be talking to James a few times a year.
So let's talk about that. How often, I'll ask you first for bookkeeping, and then I'll ask you, James, for CPA. How often should a business owner, let's say doing somewhere between, let's say under $1 million, right, in revenue, how often should that business owner be meeting with or communicating with their bookkeeping team?
Sure. So whenever you're assigned to a bookkeeper at Accounting Pros, we're talking with you at least once a week. So we're at least giving you an update that says, hey, your books are good to go. You can go ahead and take a peek, or let's answer some questions. And then moving forward, at the end of every month, we issue financial statements. So we open up the opportunity for you to call or for you to email and just discuss what you're seeing on those financials. I kind of feel like if we're giving you financials and you're putting it in the back burner or maybe in the archive in your email, they're not very helpful. So we really ask that you reach out because we're really high touch, and we don't charge for any of those types of conversations. But that being said, I mean, if you want to make it a monthly or a quarterly, as often as you're most comfortable. But I think the more times you can talk to your accountant, the better, because then you have more opportunities for changing the direction of your company.
Okay. And when you say, hey, your books are done, ready to go, what you mean is all the income and expenses that came in that previous week are organized in the right areas. And so marketing, everything that we spent on marketing is in marketing, salaries and salary, and so on and so forth, right?
Yeah, that's the beauty of having an online software is you can actually pop in there at 2 o'clock in the morning on a Saturday and look at your financials, and they actually make sense because everything has been coded properly. We make sure that you're reconciled, meaning everything has been booked to the right category throughout the week. So we're not scrambling at the end of the month to issue your financial statements. Okay,
cool. And then James, for you, let's say I call you because I want to find out how often I should meet with you. So I call you, you answer, you say, hey, honey, right? I'm just kidding. But no, we got to play on that. At least one more. I think that's the limit, though. We're done. But I say, hey, I want to meet with you. I'm less than $1 million a year. How often should I meet with you to make sure that we're planning and preparing for tax time and doing all the right things?
I would say minimum quarterly.
Quarterly?
Especially when we're first starting off working together, especially if you haven't worked with a CPA before. The good thing about Accounting Pros and Christina, like she said, she keeps your books up to date and ready to go. So at any time, because they're cloud-based, I can go in there and I can pull those and review them.
Okay.
But yes, quarterly, because the one thing is that you don't want to surprise and pay some big tax bill on April 15th like a lot of people do.
And you don't even expect it. You don't know what to expect. A lot of people don't know what to expect. I've been there.
Exactly. There's with me at our firm, we take a lot of pride in tax planning and making sure that we talk to our clients throughout the year to make sure not only that they're accounting for everything appropriately, having another set of eyes looking at the books and taking all expenses that we should, but also doing tax projections and planning, making sure we're paying in any quarterly estimates.
Okay.
There's also other things to look at, is salaries, and should we be doing the taxes through withholdings. There's just a lot of stuff that needs to happen before the end of the year. You want to take a proactive approach to it. You don't want to be reactive to all this.
And for you guys out there too, listening and watching, it's important to meet with them, not just so that you can kind of understand what to be ready for and where your business is currently at, but the terminology, you just keep speaking that language over and over, and these terms that are strange and maybe uncomfortable for you to kind of, talk about, eventually they become normal for you, and you become comfortable with the terms. And it's great when you're having other conversations with other people that you want to network with that are doing really well, because you want to make sure you're comfortable when you're getting mentored by some really successful people, which in previous episodes we've talked about the value of that. So talk to me about Xero, and why do you like Xero over QuickBooks today?
Well, I started my business only using QuickBooks because, like every other business, I thought that was what I had to do. And then, I made the switch over to Xero because a client introduced me to it. And I made the decision because, yes, it's less expensive, but also they're really easy to integrate with other software. And they stay ahead of technology, or they stay in line with technology. They're constantly adding new updates. I think they did 400 or 500 updates last year, and I think QuickBooks did like 4. And the uptime is great. I never have any issue with not being able to get my information, and their customer support is amazing. I mean, I think overall they're a much better software, and I don't want to support QuickBooks anymore. So I'm actively kind of taking clients off of the QuickBooks ecosphere and bringing them into Xero, which is really easy and helps the client also because they're looking at a software that actually makes sense to them.
Right. Now, one of the things you said that I really like is integration, because a lot of fitness studio owners, they're using softwares like MindBody, for example. I would say more than half of the fitness studio owners I come across are using MindBody or a software like that, right? Yeah. Does Xero integrate easily with tools like that so everything could be just seamless and
Oh, heck yeah. MindBody and Xero integrate really, really well. They formed a pretty strong partnership a few years ago. They actually unveiled it, I think, at XeroCon 2015, where actually we won an award, which is super cool.
You won an award?
I won an award there.
What was the award?
Living the Dream Award, because I have all my clients on a cloud-based technology, so I can live and work anywhere I want. So you asked us a second ago, can we work with clients in any state, or does it matter? Yeah, I have clients, from East Coast to West Coast, and I was embodying that, cloud accounting or cloud technology, the spirit of that, which is really cool. But they actually announced their MindBody connection there, and they're really tightly connected. So I think it's really great. You can track a lot of really cool KPIs, key performance indicators in MindBody, talking about, your people coming in to use your gym and what products are buying, things like that. But I can bring every piece of financial data into Xero pretty instantly with the sync. It's awesome.
So, when it comes to any part of your business, whether it's people, whether it's sales, whether it's, marketing and financials, it's important to have processes in place to be effective. It's hard to scale a business when everything's just up here and you don't have processes down. So what's your take on processes for a business?
Well, I agree with you. You have to have the processes written down to scale a business, but also you have to have processes written down to work with me. So if I call you or we do, a Skype call and we're talking through, how do you handle accounts payable? How do you handle accounts receivable? So how's money coming in and how's money going out? If there's like a blank stare and you don't know how to answer that question, then we've got to dig in a lot deeper, because it's almost impossible to hand your accounting life over to me if you don't even know how it's done. And I think it's important, even if you don't hire an outside person. Let's say that you want to keep it forever and you want to be the person doing the accounting. I think maybe further down the line, you're going to realize that handing it off to even somebody internally, you have to have those things written down. And that doesn't mean that it's set in stone. You can always change the way that you work. I think that we adapt to technology really quickly and easily. So the way that we work today might look differently in a year, but by having those processes written down, you know that you can follow them and track them and make sure that you're successful in running those processes.
So what do you think the biggest mistake that business owners seem to make, small business owners, new business owners, I should say, and if you can focus more on in the fitness industry, that'd be great. It might cover both. I don't know.
Well, you mentioned not having a ton of capital first starting the business and having to do a lot of things on your own in the beginning of the call. And I think that that's a really big problem, because if you're trying to run the business, meaning get new clients in the door, handle your accounting, handle your marketing, handle every thing that you actually have to do to run the business, you're going to burn out really quickly. So if you want to have longevity, you should start to look at what you can peel away. And by bringing in that unbiased, financial professional, we'll be able to give you really good feedback on what you're doing right and what you might need to improve on, so that you actually can be in business in a year. So start to focus on what you're really great at. So if you're a great salesperson and you're really good at bringing those clients in the door, awesome. If you're a great trainer and you really love creating training programs, do that. But if you don't enjoy doing the finance, it's going to be the last thing that you do, and you're going to ignore it until it becomes a problem. And I think that's a huge mistake, because I think the financials are what going to guide, what's going to help guide the business to move forward. And if you don't have a strong hold on that, I mean, you're going to be in some trouble.
And I think small business owners like the numbers to an extent. They like the end result of the research that was done, right? So they like being able to look at the score and see if they're winning or losing. But they don't want to be behind that desk like taking down all the stats. They just want to be in the game playing and keep looking at the score, right?
Yeah.
I'm like that, at least. I don't know. Maybe I'm speaking for just myself. But it was important for me to do this episode because I've learned the value of really understanding the analytics and numbers behind it so you can make great decisions. It's helped my business a lot, and I think it protects not just the company, it protects the employees, it protects the vision by being able to really have a full amount of control over the numbers and paying attention to them the way you should.
Yeah, exactly.
Let's talk about you, James.
All right.
CPA, next world. I want you to stay on because I want your take on some of this stuff. So a CPA is very different than a bookkeeper. Bookkeeper is helping me with my books, and I see you as really helping me prepare for tax season and making sure that everything's done the right way. What are some of the main services? I guess if you had to bullet it out, how does a CPA help a small business, a fitness studio?
Yeah, I mean, most CPAs are tax oriented, and that's kind of their main thing. A CPA is an educated, passed the exam. We have to do 80 hours of CPE, continuing education, every 2 years. We have to stay up to date with all these tax law changes because they change all the time. They'll be changing again in 2016.
Okay.
2017, yes. Some of the services the CPA provides is not only another set of eyes looking at your books, looking at your accounting. We're educators. We educate our clients. What do these numbers mean? Are they looking at them correctly? And then at the end of the day, of course, we have tax preparation, and all the tax laws and everything that goes into that, tax planning. And then we just help with, basic business things. Like I said earlier, how much salary? Should I be taking a salary? How much money should I be taking out of the company? Just questions like that.
One of the things you helped me out with a lot, and I feel almost embarrassed that I didn't know stuff like this, for the previous 6-7 years I was running this business, was deductions. And, for example, if I were to go out and just get myself, some lunch, that's very different than if I took a client out and very different than if I took an employee out, right?
That is very true.
Talk to me about the differences and what's the difference in saving and deductions on having lunch with an employee or a client?
Yeah, so basically, the IRS has a rule that meals are 50% deductible.
Okay.
And what they mean by that, they mean business meals. So a business meal would be you go out with a client, a prospect, or something like that, and you pay for a meal.
Or if you bring in, let's say you own a fitness studio and you bring in food for the entire, let's say, group that day, right? Like, let's say you have the day catered for an event that you have.
Well, that would be totally different.
Really? So
Yeah.
So how would that work?
So a business lunch would be maybe a business meeting that you would have 50% deduction. Now, let's say you did bring in meals to, it's an office, like a gym that you were working for that's a potential client, or maybe they're a client. Well, really, that should be a marketing or promotional expense.
Well, let's talk about for a fitness studio. So for a fitness studio, that business owner decides to, let's say, take one of their members to lunch or bring in lunch for the members. Are those two different types of deductions?
Two different things. So when you bring in meals for your staff, that's a benefit of your staff. That should actually.
What if it's not for the staff? What if it's for the members?
Oh, for the members.
For the members. So let's say I'm having a class. Let's say I own a yoga studio, and we're having an event today, and I want to have it catered. So for today, I want to be able to provide food to everybody that comes in and take a class. Maybe it's smoothies or whatever, and I buy that and I bring it in.
Yeah, that should be 100% deductible marketing expense.
For the customers, really?
Yes.
So why? Oh, because it's a marketing expense.
Exactly.
Okay.
Yes.
And so those would be 100% deductible.
Yeah.
Now, if I go out to lunch with a member, right, and I'm a fitness studio owner, I go to lunch with a member maybe because they want to talk to me about their goals and I want to help them through it, that is 50% deductible.
Correct.
Now, let's say I have an employee that I want to take out to lunch to talk to them about things they could be doing better or show appreciation. That is 100% deductible?
That would fall in the 50% realm.
50%?
Yeah.
Okay.
When the 100% realm is when you bring in the meals to your office for your staff. It's for the benefit of the staff. Say, for instance, you're working late or you're working through lunch, right? You're working through lunch. You don't want them to leave. It's for your benefit, the benefit of the business. You should get 100% deduction for that, for the meals that you bring in for your staff.
Now, I bet you a lot of you guys didn't know that. Some of you probably do, but I didn't know that. So let's talk about that. When you say 100% deductible, explain to me what that means and what that doesn't mean, because a lot of people get confused on that.
Sure. I mean, you may not realize this. When you're doing your accounting, okay, you could be using the Xero program, your QuickBooks or whatever, and you code your, let's say you went to a restaurant, you code it to meals. You throw everything into meals. Well, everything's in one account, and most people just assume 50%. because, well, the IRS says meals are 50%, just kind of a blanket statement. But you really need to drill down and find out what were those meals for exactly and split them out into separate categories.
Because you could be saving 50% on all your stuff.
And 50% means when you file your tax return, they're throwing out half of the expense. So
Wow.
you're losing half of that expense on your tax return. You may or may not realize that because most people probably don't go line by line through their tax return to see what actually was taken. Some people may.
So if you're categorizing a lot of that stuff right, you're doubling your savings by doing it.
Yes.
Which is a big thing that you guys want to do.
It is.
Obviously, the more money you can save, the more money you can reinvest back into your business. Okay, so now let's say you said if it's staff. So what if I decide to take my entire staff to a restaurant down the street? Is that very different than having the entire staff cater to here?
No, that would follow under the same category.
So it's still 100% deductible,
Yes.
but if I just take one employee, then it's 50.
Yes.
Okay,
Yeah.
got it. What other expenses should I know about that you think the average person doesn't really know about that they can deduct?
Well, some people aren't thinking about the car they're driving for business or how much they use it for business.
Okay.
You may or may not be running those expenses through your business account, but you probably drive your vehicle for work.
Right.
So we definitely should be taking advantage of your vehicle expenses.
What if you have like a den in your office that you use to do work from home? Because as a business owner, sometimes they don't like to go into the office all the time.
Correct.
Because sometimes they feel like they can be a distraction to the team and vice versa,
Mm-hmm.
and they really need to make sure they get vitals done at home. So can they write off some of their home?
Definitely. Many of my clients, most of them utilize some sort of a home office. Now your kitchen can't be your home office. You have to actually have a dedicated room. If you
Okay.
have a dedicated room with an office, have your computer in there, then you do have a home office, and the expenses you can deduct are your home internet, a percentage of your utilities. So let's say
Electric? And,
electric, water, all your utilities, you can deduct a percentage based on the square footage of the office to the whole entire house.
And you can help people, and CPAs, that's really what they're supposed to do, is help them structure that.
Yes,
right?
and do all those calculations that are, that benefit that, yeah.
So every year I owe money, right? A lot of money. And it's not that bad, right? The more
Yeah.
money you owe, that means the more money you've made. So it's not a bad thing. But obviously you want to save if you can, and do it right so that you can reinvest back into your business. So how can I what are some other things I can do to focus on to make sure that when I do my tax return every year when I file, I can save more money?
Yeah. Well, my goal is to get my clients, not have them in debt. And if they have debt, it'd be good debt. Debt that maybe they took out a line of credit because they reinvested that money in the business. Making sure they have good interest rates on those loans, things of that nature. But then also what comes with that is tax planning and making sure you're paying in enough money throughout the year. The IRS is not a bank. They charge horrible interest and penalty rates. So if you don't pay them what you owe them by April 15th, the clock starts on the interest and penalties, and
it's high.
And it's high. You're paying like 9%. It's cheaper to go down to the bank and get a loan these days than to pay the IRS. Although most banks are not going to loan you money to pay off IRS debt because it's too risky.
Now, some people start businesses with the grand vision of maybe starting a franchise and having 60 or 70 of them, and that's kind of their retirement plan, right?
Sure.
Is having a business really running itself. But some people really start a business to really just do what they love, make good money while they do it, maybe just a single location, maybe two, and eventually they'd like to retire, right? So how can you start planning for retirement regardless of what your goal is? How can you save for retirement?
Well, first of all, it's never too early to start planning for retirement. Especially as your business is making money, you need to find ways to lower that tax burden. And one of the best ways is to fund some type of retirement plan. Because not only are you getting a tax deduction for it, but that money's going into your pocket or into your employee's pocket. Okay. There's a lot of different flavors of retirement plans out there. You've heard of IRAs, 401ks, profit sharing plans, you name it. It depends on how much money you want to put away as an owner, how much benefit you want to provide to your employees, and what type of business you have. So that's something that needs to be analyzed on a case-by-case basis to figure out what works best for you. But the number one thing is start now.
What type of business is right for me? So let's say I'm a fitness studio doing a certain amount of revenue, and maybe that'll define that. But there's LLC, there's S Corp. How do you determine which one you should be? Because I've heard certain people say certain things, others say others. What's the final?
Yeah, and it's again, it also depends on location, where you are, what state you're located in.
Why is that?
Well, the thing is, LLCs are actually all the entities are state provided by the state. So, state of Arizona, if you want an LLC, you go to the state of Arizona and set up an LLC. That has nothing to do, with the federal government, the IRS. In this state, LLCs work very well for liability protection, and they're a plain vanilla tool where you can elect to be taxed however you want in the eyes of the IRS.
Got
So
it.
I can set up an LLC, and if I decide later on I want to be taxed as a corporation or a partnership or whatever, you can make an election to do that.
Okay.
In other states, you have to watch out. States like California, they have what's called gross receipts tax on LLCs. So if you set up an LLC, even if you elect to be taxed as something else, they still make you pay what's called their gross receipts tax, which they tax you on the gross,
Okay.
not the net. So you have to be careful. There's some other states, Texas does that. So that's a state-by-state case basis. S-corps are very handy. They allow you to reduce your self-employment taxes. But there's a fine line where an S-corp makes sense and it doesn't make sense. So basically, you have to have good books and records. We have to look and see what the income is like so we can plan on this and then make sure will that S corporation make sense for us to do it.
Okay. So let's do a little power round here. And this is for you guys. We're going to go real quick. So when it comes to salary, right? Fitness studio, let's say you're doing 400,000 or 500,000 in revenue, somewhere under $1 million. What's the guideline? How do you determine how much you should spend in salary? What's your salary cap? Anybody?
So I was going to say, like, a really easy bit of math would be a third of the revenue goes to the owner, a third goes to salaries of other people in the business, and a third should go to operating expense. I mean, that's going to depend a bit on the type of business and how large you are, but that's just the quick and dirty math that you can do on the back of a napkin.
Okay, sounds good. And for saving every single month, this is something that you guys, I've learned through mentorship, is extremely important to make sure that you guys are putting money into your business every single month and saving it. The reason, you never know what's going to happen. Things can break down. Employees can quit and you need to hire somebody really quickly. You may get sued on something you could have never expected happening. Or on the positive side, you could have a really great opportunity where somebody wants to include you in an event, or you have this opportunity to acquire a company that could be great for you, but you don't have the money to take advantage of the opportunity. You have to say no to something that could have really helped your business. So saving is extremely important for me, and making sure that I'm constantly doing that. Personally, I want to make sure that no matter what, I take 10% of the revenue every single month and I put that into my savings. And so the more revenue I make, obviously, the more I save. What are your guys' thoughts on that?
I totally agree, but I also want to back up. And you mentioned potentially getting sued. And James mentioned a moment ago some of the structures that you can decide to become. So LLC, S corp, C corp. It's important to make sure that you protect your business by forming an entity. And then getting sued it's not going to take any of your personal assets. It's going to make sure that everything is only around the business. And you have a really good insurance policy. So you've got something in case somebody trips and falls and hurts themselves, or maybe they're doing a WOD and they hurt themselves. Make sure that you've got that liability insurance in place way ahead of time. Great.
And a phrase that I was taught by a few different people in this group called EO. I think you guys know EO.
Yeah.
It's revenues for vanity, profits for sanity, and cash is king, right? And so basically what the idea is revenues for vanity. Oh, we're $1 million company. That doesn't really mean anything. There's plenty of $1 million.
You could be losing $1 million too.
You could be also losing $1 million a year, right? So, and I've met companies that are doing over $1 million and they're losing $20,000-$30,000 a year, right?
Yeah.
Not making anything. So that's just for vanity. That's just say I'm doing this. Profits for sanity, right? If you look at it and you go, okay, the gross profit's there. When we look at it, if we can adjust things, whether it's employees or whether it's tools that we're using or rent or whatever, we can actually still make this business work, right? So there's sanity there. But cash is king. At the end of the day, are you winning? Is your company growing? Or do you have a profitable business? And so we need to make sure at the end of the day, the net profit makes a lot of sense. And so for net profit, I got a great book here that I read, guys. And there's a good book that you recommended too, Christina. What was it?
Profit First?
Profit First. That's right. And I heard about that a lot too. This is a book that helped me. And I'll tell you right now, I've recommended this to a ton of small business owners that didn't know much about finance. because they were intimidated by other books. You know, financial intelligence was a pretty tough one. But this book really breaks it down in a great way. It's written by Greg Crabtree. It's called Simple Numbers, Straight Talk, Big Profits. And one of the things in it that helped me out a lot was really learning these 3 different numbers, 5, 10, 15. So 10% is where your business is healthy. If you're able to get a 10% net profit, meaning if your business is doing $100,000 a month, if 10,000 of that in revenue, if 10,000 of that's net profit, then you know we're good, we're healthy. If you're doing 5% or less, then your business is on life support. You're one bad move away or one thing away from happening to where you can be really in a bad position. And 15%, it's one of those take it while you can get it, but be very careful because you might be undercut in pricing by somebody in the future, or maybe you're restricting your company from growing by not reinvesting it back into your business. So there was a lot of really great tips just like this, guys. But you know, some of the stuff that Christina shared and James shared, this is really great. And you guys have stuff on your website. Can we put their websites up on the screen too? So make sure that you guys really get a good hold on this stuff, because the last thing you want is for your business to grow and you have revenue and you have members and it feels great, and then you're still not profitable. Because if you guys ever play the game of Tetris, it's a lot like Tetris, where it's like, that's great that you're moving up the levels in revenue, but these pieces keep falling that you can't predict. And the more levels you go up, the higher revenue go up, the faster the pieces start falling, and eventually you're game over.
That was such a great way to explain it, yeah.
It's true though. You know, in the beginning, those things didn't happen often. You don't have lawsuits happening when you're doing $50,000 or $150,000 a year. Yeah. Those things happen when you're doing $1 million, $2 million, $3 million a year. You're in protect mode, right? Yeah. And the challenges really come in different flavors and sizes when you start growing. So for you guys, it's great that you have grand visions of really growing your business and getting to new heights, but make sure that you're also getting very, very knowledgeable in this area, at least knowledgeable enough to be able to anticipate problems that could arise and be able to be prepared for certain things like tax season and things like salary cap, and how to really protect your company from getting into trouble when you're growing, because that's one of the reasons a lot of people fail. They grow too fast. Actually, the previous episode with Tom Hatton and the CEO of Mountainside Fitness, he attributed most of his failures to growing too fast and not being prepared for them. And that's something he learned the hard way. Hopefully this episode helps you guys skip all that and press the fast forward button. So thank you very much, Christina.
Thank you.
Thanks, James.
Thank you.
Appreciate it. And thank you guys all for staying involved the entire episode. We'll look forward to seeing you next time.
See ya.
Thanks so much for joining us today. If you like this episode, then subscribe to our podcast on iTunes or Stitcher, and to our YouTube channel to never miss an episode. You can get all the links by going to thegsdshow.com. Thanks, and see you next time.